Hello, I'm Minjun, an international student from the United States. On May 10th, Minjun University will start a special broadcast about United States stocks. Actually, this is my first time doing a special broadcast. Frankly, our weekend meetings have become routine. The man of the weekend, Representative Kim In-jung, joins us again. Hello, Representative.
Yes, hello, Representative. I feel good because I see you often.
Yes, now that we meet like this every week, I feel good. Today, after a long time, instead of an American stock investment class, we are resuming the delivery of Joyce's staff and Sitting Alpha's news, which we had been doing before. Since we're doing this in order for the first time in a while, let's take a look at how the stocks we recommended before have performed. And today, the stock that Joyce recommends is said to be one that Joyce herself is recommending, and it's also a stock that is getting a lot of attention from the Seeking Alpha panel members. It's a stock that's drawing a lot of interest. First, let's briefly review the performance of the stocks that were recommended by Seeking Alpha and Choice Stock over the past few months. Yes.
First of all, I think you already know what this corner is about. To put it simply, this is no longer a showdown between Mijueun and me. In each system, we simply look at the scores and select promising companies, and then together we look for the key elements of their business models, education, and revenue streams. That's the kind of program this is. So, starting from last October, we've been doing this for about a month. And as we continued in this way, when the market went down, there wasn't much meaning in making recommendations. Instead, at that time, we focused more on education and other things. And then we continued on like this. Based on the recommendations made previously, I will briefly review those items, and then I will make sure to include them as today's recommended items as well. First, I'll share my screen so you can see it. This screen is the one I showed you before as well. If you look at it in order, the first one I brought up is the two stocks at the top of this box, which are the ones the Choice Stock System recommended, and the two at the bottom are the ones the Sitting Alpha recommended. The light blue color indicates stocks selected in plus, while unmarked stocks are from minus. This color coding allows for easy differentiation between the two at a glance.
As for the next part,
At first, we did consumer finance companies. Then we recommended ONWARD and Mercado Libre for the early stage. And after that, in the Seeking Alpha system, we did companies like JD, Com, and Carnival, like this. Currently, here, Mercado Libre has the highest current earnings at 10%, and that's why Mercado Libre is showing good performance. JD.com is currently performing well, with about 8% returns in the current pre-market. It's quite stable and the sector is well established, so there's nothing to worry about. But if you look at it from a macro perspective, it's an industry that can grow steadily, which is why I mentioned it at first. This stock can be difficult to buy at certain times, and it can also be hard to sell. That's because it's closely related to the liquidity of the market. So depending on which system you use and which strategy fits you, you select the stock, and if you use the system well, you can maximize your own returns. I think that's the key point. The second one is a company that made a profit from the semiconductor sector. The semiconductor industry was one of the representative industries that benefited from the recent uptrend in NVIDIA. So the system that showed the highest returns was the Cadence Design Systems Plus system, which currently has a 74% return, with ARM and Qualcomm recommended as two stocks. In the Seeking Alpha platform, Taiwan Semiconductor Manufacturing Company and Marvel Technology were recommended as the two companies. Currently, for about 6 months, Cadence Systems, which was recommended by Choice Stock in the previous market, is still recording a positive return. The third one was directly recommended as a stock in the technology sector. Thus, we each selected a stock. Seeking Alpha recommended Twilio, while the Choice Stock System chose DocuSign. However, DocuSign is currently down 24%, indicating poor performance. The local stock price can be highly volatile, soaring when the business performs well and dropping significantly when it doesn't. The company's market capitalization fluctuates based on its business performance, and it has demonstrated this kind of volatility. If this company turns things around and does well, it should be good, but right now it's not doing well, so the performance isn't great. However, since it has these characteristics, if you look at it over a longer period, it might turn out better. Recently, among the tech-related companies I recommended at the end, I found a software company that stood out. So in this episode, I will introduce a company called Thought Alliance. I repeatedly recommended and introduced this American listed company based in China, which is why it's only available in China, despite being listed in the United States.
If you look at the company,
You clearly like it in practice, but you don't really know the stock price. Like, this is the biggest risk, but I still recommended it because it's a good company. Total Truck Alliance is a company that provides an online system connecting people who need to transport cargo and goods with those who operate trucks and transport goods. It works well even in the lower market.
Bertelta 3.
I'm making about 3% profit. In the Shikang Alpha system, I recommended Celestica, but when I looked at the original vision price range for Celestica, it had dropped a lot, and now the rate of rebound is also quite fast. So again,
Next month,
I sometimes switch between Celestica and Piltover Alliance. So if you look at these things together with the volatility, you can see that the system or categories are referenced like this, and I think it would be good for you to take a look at them as well.
looking at the performance of the stocks that were recommended a few months ago, you can see that choice stock is leading the market. You are definitely not familiar with the market.
It was good, but I still have some concerns that I need to watch a bit longer.
First of all, I think it would be good for us to take a look at the trend of choice talk. I think I should tell you the announcement. I almost forgot before we wrap up. This broadcast is on May 10th, and my wedding is on May 8th. The broadcast goes out on May 10th, and then the next day, May 11th, is the Choi Star and Shinsang Alpha's promotion match final day. So, for those of you who were planning to join Shinsang Alpha or Choi Star Club after watching this broadcast, there might not be much time left. If you sign up within the application period and receive the benefits, it would be good to join. Then let's review the results up to this point. Now, the important thing is whether we can put more of our limited investment funds into which stocks at this point. And if we discover a new stock, it would be good to hear your opinions on whether it would be better to continue investing in the existing stocks or to invest in the new one. Today, as always, Mr. Choi will introduce the stocks he recommends. This week, Mr. Jeohee had a theme because there was no major change in the afternoon market and also because the adjustment continued quite a bit in the afternoon. Today, our theme was to see which stocks are being recommended as top picks by securities firms and analysts in the current market and which sectors are receiving the highest ratings. So, Mr. Kim In-young, if you could analyze which United States stocks are currently considered the most attractive top picks by choice stock, that would be great.
Yes, as you said, let's take a look at which United States stocks are currently receiving the best ratings and the highest evaluations in each system among the top picks. Now, based on this week's theme, let's select the stocks that have the highest scores according to the criteria and explain them in order of their scores, listing the names as we go.
so that it's easy to understand.
I'll explain it that way. But just because a stock has the highest score or the best ranking doesn't necessarily mean it's the best stock. So the stocks in the top 20 are all good companies, and the content provided by the representative is also available to everyone. So please refer to that. When you look at the data, if you check it from this perspective, I think it will be helpful. First, I have the top 20 stocks on the screen, but here I will select about 3 stocks. First of all, the reason is that in the case of MSTR, its price is directly linked to Bitcoin. So rather than analyzing it as a stock, it's more like a coin. That's why we excluded that part a little bit from the selection. Next, in the case of ETFs, some are actually stocks but are listed as ETFs. So we excluded those industries and only focused on companies that are directly listed as stocks. For now, I put those 2 categories aside and focused on the rest. So I use Smart Score and place the companies in the matrix 2 for valuation analysis to see where they are positioned, and then I filtered them once. Second, among the items filtered in the first round, I selected companies with high growth rates, and among those I further filtered for companies with low price earnings ratio. So I did a second round of filtering based on that. And then among those, I selected the final stocks, and I'll go through them in the order I picked them.
First,
The first is matrix analysis. I draw intersecting lines dividing it into 4 sections. On the right, I write the smart score I provide. The system has a maximum of 100 points and a minimum of 50 points. For valuation, the top represents high valuation and the bottom represents low valuation. So when I look at all these scores together, Some companies are currently receiving low scores, but that doesn't necessarily mean they're bad companies. For example, if a company has a score of 50, it doesn't mean it's a bad company just because the score is low. However, if a company is in the top 38% and has a score of around 40, and if it also has a certain level of growth, then it's worth considering as an investment target. These are the kinds of companies that stand out. So just because it's 50 points doesn't mean it's bad. That's not the idea here. Next, let's move on to the next part.
70 points, 70 points.
There are a lot of companies that fall into this category. And 70 points is actually within the top 10% of all listed companies in the United States. So out of 5,600 companies, being in the top 560 means you're doing pretty well. If you're in the top 10%, you're basically at the top. That's one way to look at it. So if you look here, companies like Uber, Celestica, Frontier, and Innodata are all just above 70 points. They're barely over that 70-point mark. There are a lot of companies above that level. Next, Meta has 86 points, but from the top, it's within the top 0.5%. Meta, Google, Nvidia. TSM doesn't need to be classified as an industry. You can just look at it like this. It's just a really good company. Where does Yonje live? When making a risk assessment, valuation is just one part of it. The more crucial aspects are the fundamentals and timing. If those are right, then the companies that fit here are always good to buy. Don't get too fixated on timing. So in reality, depending on the current market conditions, TSM could be the best, or on the other hand, Meta could be the best, or even Broker could be the best. So I thought that choosing based on the current market situation is the right approach. First of all, my basic score is a smart score.
In terms of ranking, Taiwan Semiconductor Manufacturing Company.
NVIDIA took the #1 spot in the filter. I added a filter for companies with high scores. What I really want to say is just hang in there. It's not the choice that's hard, but rather I'm making it hard.
That's it. First of all,
in the system, they say that the data is collected like this. First of all, when several examiners analyze various data at the same time, there are also new features being developed that allow you to see the results in this kind of format. Once completed, you can view it in a movable format like this or separately by group. We will provide it that way, so please refer to it when needed. Lee,
You're going to make a chart, right?
if you make this chart, the mobile version is too
It's cramped. So as a group,
in a way like Mijueun. The company is good, but the price is high. Some companies are risky while others are cheaper. However, this company is really good at the moment. So when you divide it like that, you can look at it more clearly and you can see all the categories of your portfolio or interest. That's why I'm preparing it carefully. The next broadcast is coming up. I think I can introduce fully implemented features that I mentioned earlier.
if you do it like this.
I think even individuals who aren't developers can organize things like this using context.
that's good.
Next is the second matrix chart. In the first one, John Su organized it. So from here, I'll be the first presenter. TSM, CMBD, Google, and Meta were ranked in this order. And for the second filter map, we used the filter based on growth potential. So one axis is earnings per share growth rate. The other axis is price earnings ratio. And then we looked at how much the price earnings ratio compares to the growth rate and plotted the positions of the matrix accordingly.
That's how it was. But
Here, I was using full high definition and Credo technology. But the reason why I switched to Credo technology is because the earnings per share growth rate is a key indicator.
so Palantir,
I can't use the value because it's minus right now and currently in the red. So there's no way to show the percentage. That's why I have to show it in a different way. So I just left it out here. The price earnings ratio of the converted stock was 1,600 times, which is extremely high and doesn't make sense. If the price earnings ratio easily exceeds 1,000 times, it's not just about the stock price increasing. The number itself is illogical. A rising stock price resulting in such a high price earnings ratio is not normal. So for companies that have just turned a profit, it's not unusual for their price earnings ratio to be several hundred or even up to 1,000 times. Even if the price earnings ratio is high, it doesn't necessarily mean the stock is expensive. As the company grows and profits increase, the price earnings ratio will drop quickly.
just for reference.
So you can't just judge whether something is expensive or cheap based only on that.
And next,
In the case of companies like Palantir, the price earnings ratio is currently 450. So for companies like this, the highest it ever went was 160, but now it's gone up. So the prices are all mixed together. And if you just leave it like that, the division doesn't work well. So I divided them accordingly. Palantir and CrowdStrike data are shown here separately, so please refer to that. I first sorted them in this order and received them in order. And then among these, I resorted the companies with high growth rates. So currently, the companies with the highest expected earnings per share growth rates are Broadcom, followed by AMD, then Nvidia, TSM, and Google in that order. So if you look at it in order of growth rate, these five come out again like this. So from the top, these are the ones that stand out, and I made my selections based on those groups. So Broadcom, AMD, NVIDIA, TSM, and Google, these are the ones that are quite outstanding in that order. So now I have to pick one stock, and if I just look at the order, it seems like Broadcom should be number one, but I'm not going to pick Broadcom, and I'll go with AMD as my number two. I'll explain my reasons for that in detail in a moment. Based on growth rate alone, Broadcom ranks first. In terms of actual performance, Broadcom also has the highest numbers, and in cases like this year, when growth rates are high, it stands out even more. But last year, due to the base effect, the growth rate was quite high, and these factors are receiving a lot of attention. Next, it's a bit easier for growth rates to fluctuate, but the fact that the growth itself is very high is true. Broadcom's growth stock, then, is a true growth stock. That's how you can describe it. In reality, sales are growing well, and in the next 2 quarters, although there may be a temporary slowdown in performance, overall the company is doing well, so the stock price is showing a pattern of rebounding. So it's a healthy trend. The part I mentioned at the end is the part that was mentioned right before this option. So at that time, Broadcom was trading at a low valuation, so it was considered undervalued, but now after a sharp rise, it's entering a high valuation zone. In this section, this battle won't end soon, and we're not just following trends and buying every time. That's not our goal. Actually, I'm taking a defensive approach.
Just watching.
If you just watch and take a defensive approach, you might be able to minimize the risk of bankruptcy, at least strategically. So I kept watching this industry for a while, and then I thought, let me take a look at it again. As I kept watching AMD, and the more I looked, the more I felt that the fundamentals were all solid. That's why in the end I decided to go with AMD. I actually went to the site to see how AMD comes out in the choice star system, and after checking it myself, I decided to make my final choice based on that. That's good. The first one was Broadcom, but I chose AMD. If you look at AMD, it's around $100 right now. I'll show you step by step, starting with the smart score, which I always check first. If you look at the smart score, it's 80 points, and compared to before, it dropped by 2 points.
This score
Went up this time. AMD recently made an actual announcement, and is actually doing very well.
That's right. And then
Compared to that, the stock price isn't going up.
that's what it is. If you ask why,
Usually, if you look at it realistically in other industries, even if it's just a 10%, that's considered a normal figure. When you look at things like the consensus on Korea or these kinds of things, even in cases like Kyongyongjin, we had to take precautions. Among them, one of the parts that didn't look good was the sales related to China. There could be concerns about those sales, and it seems like the sales could drop by as much as $700 million. Those parts are a bit risky, so there were comments about this, and that's why it was evaluated as a negative point. Artificial intelligence acceleration was originally expected to happen this year, but on the contrary, it seems like it will be delayed. That way, it can be recognized as a separate revenue. So actually, Hojay and Akjay both announced their respective data earlier, but in the market, it seems like people are trying to be more cautious about these parts, and there are more things they're trying to be careful about. So I brought the changes in the adjustment value of earnings per share. And for companies like AMD, the earnings per share revision value is also shown on Seeking Alpha. And here as well, the adjustment value is going down. The reason it's going down is because when reflecting those cases, it's inevitable that it goes down.
Then
The decline is already reflected in current housing prices, right? For investors, location is even more crucial, hence the prices reflect that. If it's not the case, the price could fall further due to uncertainty, which concerns investors most. As someone who talks about earnings per share revisions, I tend to be more cautious as there is often a lag between earnings per share revisions and stock price revisions. But at this point, is it right to see this as an opportunity to buy? This was something I worried about until the very end, and it was crucial for my final analysis.
There was a point, but just
What I thought of was influenced by the main text. Even though it was delayed a lot without any particular reason, it was already reflected in the news, and even though it was announced, it didn't go up any further. On the contrary, when the actual results came out, what didn't go up was because the market had already reflected it. So it's more reasonable to see it that way. I think the revision of earnings per share or sales estimates will be delayed a little bit. But at the same time, if you look at the current situation or the recent trends, you can see that the concerns are still there today. People are saying they're worried about the United Kingdom, and these articles keep coming out. But if you look closely, most of the concerns are related to China. When the news broke, investors immediately focused on that stock, reaffirming its potential to rise. Okay? So most of the stocks are in a similar situation to me, and that's why their prices have been affected. If the overall market rises in the short term, there are industries that can benefit from it. Personally, I don't think AMD is one of them. Data shows that demonstrating solid fundamentals in your performance can earn you around 80 points. When you look at the data, you can see that this site has a typical upward trend. This upward trend was also present a year ago, and when you look at it this way, you can see that the current numbers are similar to those numbers from back then. So compared to a year ago, AMD has become a much better company. Growth has improved compared to a year ago. Financial stability was already at 100 points, but profitability has gotten even better. Current liquidity has improved, and uniqueness has also improved. So it's become a better company than it was a year ago. On the other hand, the stock price is influenced by a huge number of variables. So if it goes up due to one factor and then goes up again due to another factor, it's affected by both.
so in reality,
Few companies are in a similar situation with a high growth rate. So if you compare the results and scores here, you'll see that it's not easy to find a company whose data has improved this much in just 1 year. The current performance is being maintained, but it's not merely staying the same. There's more to it than simply maintaining the score. Maintaining a score around 90 is an amazing achievement for a company. However, it's even better if the score continues to improve. Companies currently maintaining a 90 score are already outstanding. At that time, companies that only talked about being number one as a slogan gained less recognition than those that proved it with real results and performance, leading to many successful cases. So when you look at this kind of data, I think it can be a great help to many investors. For AMD, the points are 66, 68, 69, 72, 73, 79, and 80. So it's a company that's been doing well, but the fact that the Chinese companies have caught up this much, this is something we need to think about again. That's the part. But if you look inside, the growth rate was 55 points in the past, but now it's gone up to 80 points. So if it's over 80 points, you can consider it a fast growth rate. In the United States, the company is seen as having low growth potential, ranking in the bottom 1%. Its competitiveness has risen to 90 points, financial stability is at 100 points, and profitability is low, around 25 to 40 points, but gradually improving. The company's cash generation ability is also at 90 points. As a company, it's definitely a good one without any shortcomings. We can be certain of that. Next, when I look at the second and third quarters operating profit charts, this continues to be flat. Even if I look at it as a short-term chart, it keeps being flat, and even in the midterm doesn't show any clear rebound. Despite occasional signals suggesting a potential increase, the stock price continues to decline, indicating a slow midterm chart turnaround, which explains the sluggish recovery. When the market is moving in a certain direction, the midterm becomes important, but due to the nature of the market's changes, it tends to be quite slow to react. At turning points, it's better to look at the short-term chart, and whether it's really a turning point depends on the degree of overlap in the moving averages, or if not, it depends on our own confirmation. At these times, since the possibility of a rapid reversal is high, it's better to use short-term charts, even if just a little, rather than midterm charts. So when you look at it in the short term, right now, the 5-day line has crossed below the 21-day line, and now the 21-day line, so the 5-day line is trying to cross below the 61-day line. That's the current situation. So the 61-day line, the 101-day line.
It's 63 days, but right now,
It's at 100.36, and in the pre-market, it's currently at 101.78, so it could possibly go up today. So if it keeps holding above the 61 line and stays well above the $100 level, then the 21 line and the 61 line could become support levels and act as a turning point. If that happens and the stock prices stabilize, there's a good chance that positive signals will appear as a result. So from a supply and demand perspective, there is a point where a change can occur easily. Next, the third stock price earnings per share chart. This is a chart that predicts future stock prices, and I brought it to explain. In the end, stock prices are determined by expected earnings per share, so whether you believe in this projection or not is important. According to this chart, the stock price was over $200 at one point, but now it's around $80, as you can see.
That's how it is, but
The company is still steadily growing step by step. Depending on China, dividends may slightly decrease and earnings per share revision could decline. So when that news comes out, it might shake things up, but the long-term direction will be this direction. But since we can't usually catch the timing well, we end up buying at the peak, and if it drops just 10%, we panic and sell. That's how most individual investors behave. When you look at it in the long term, if the industry itself is on the rise, the current drop in stock prices is actually quite reasonable and can last for a while. Value stocks and risk assets are currently at low levels compared to the broad market, indicating that the risk associated with value stocks is relatively low at the moment. According to the table, the expected sales growth rate is 20% for this year and the next, and 15% for the following year.
Percent.
At this level, it's a pretty high growth rate for the semiconductor industry. Usually, even in cases like NVIDIA, after this year and next year, the growth rate tends to slow down. And if semiconductor industries achieve this level of growth, it means they are likely to become one of the top-ranked companies in the semiconductor sector. So the growth rate is quite high, and even next year the profit is expected to double. This year the profit is expected to increase by more than 2 times, about 121% next year by 61%, and the year after that by 28%. So, until 2026 in terms of actual results and growth, it is clear that this is a company with the potential to show steady growth without much concern. We don't know about 2027 yet, but we haven't looked that far ahead or made any projections for 2027. The consensus is that the closer it gets, the more certain it becomes.
That's why analysts too.
Analysts' predictions tend to be less accurate the further into the future they forecast. As the time frame gets closer, even narrowing it down to about a year, judgments can be made with much more accuracy at that point. So if you look at it mainly by the stock price, usually within about a year or at most 2 years, if the growth is steady and the growth is accelerating, it's best to invest or buy within that time frame. Next, let's talk about valuation. Right now, the valuation is low, but there are a lot of stocks with low valuations. If you look at the current situation, when AMD was at $180 at that time, even from a high valuation perspective, it was trying to go even higher. That's the kind of market sentiment there was back then. Regardless of earnings per share fluctuations, valuation risk was a concern. When the market dipped slightly, companies with valuation risks often experienced more significant drops compared to others. So, as the stock price dropped like this, at that time when the stock price fell to around $78, it fell all the way down to the support line. This was a very undervalued and very unusual situation. We were in a very unusual situation, but even though it was a very unusual situation, it wasn't easy to actually buy at the bottom at that time. What if it drops even further? When the market goes down, only bad news comes out, and when the price goes up, there is almost no bad news coming out. That's why you have to be really careful at times like this. So I don't lose my faith in stocks either, because you never know how far the price will fall. You get scared and anxious and your confidence drops. That's why, even if you buy stocks little by little, you might feel like you're losing money, but you shouldn't lose your faith in stocks just because of that. So even if you look at the valuation, it's still undervalued, and even in the next 2 or 3 years, it's likely to grow. That's why, even from a valuation perspective, it's quite attractive. And finally, if you look at the daily signals, the buy signal appeared on May 6th.
Yes, that's right. Right now.
Now it's down by 0.23%, but the buy signal came out on May 6th, and that's the current situation. So the buy signals for $100, $159 came out, and it seems like it matched well. This is also a very sharp point, but if you look at the chart for the past 6 months, when the signal came out, actually, during those 6 months, the buy signal didn't appear. Even if you look at the additional chart, it didn't come out, and at this point, it still hasn't appeared. The price didn't go down and match the buying volume and previous trend, triggering the signal. When it dropped again, it immediately hit the stop loss. Since we can't predict how far it will fall, we must wait and see. Recently, when signals like this appear again in the system, it's easy to catch the buying opportunity again
Mijueun's change.
if the good industries and the changes in supply and demand that we saw as signs are established at the end, then buying signals will appear again. But if the market shakes again due to external factors and the supply and demand breaks, then buying signals may appear again. So technically, buy and sell signals may appear like this, but I wonder if this market is technically in a good position again. I'll show you just one more chart at the end, and I'll try to wrap this up as quickly as possible. When you look at the actual numbers in the financial statements, you can see that the actual figures are all improving. If you look at this financial chart, you can see that the company's operating profit was in the red, but after turning to a surplus, the size of the operating profit is increasing rapidly. This is being shown very clearly.
That's what it is. In reality,
For example, Yasun Minjun keeps saying that the company's profit margin and net profit margin will continue to improve. And if you look here, you can see that the operating profit margin is steadily increasing from 1%, 2%, 3%, 5%, 7% to 9%. The operating margin continues to improve like this. The sales growth rate is also expected to increase by up to 20% over the next 2 years. So the combination of margin improvement and sales growth is likely to create a significant synergy effect.
With that data,
I'm watching it. So as for me, for the final showdown, I chose AMD as my representative in that matchup.
yes, thank you for the detailed explanation. From the start of today's recording until now, we've been holding on to our own picks and haven't revealed them to each other. So when you said AMD, I was really curious and excited. Even so, I thought I was the only one who had been watching it closely, but it turns out the all-in-one members already knew. Now, when I buy stocks, I immediately disclose them in real time and share them, but I didn't have AMD, then I bought it before, then I sold it. But recently, I bought it again, and that was on May 5th. So on May 5th, after I bought it, I immediately disclosed it to the members like this. But on May 6th, the stock price went up. On the initial screen, it was supposed to go up, but instead it went down. I thought it would go up, but it actually went down like this. So this time AMD, which is included in the United States stock title picks, is also receiving good evaluations on choice stock, so I'm feeling a bit relieved. Next, we'll move on to the stock information alphabet. Oh, and one more thing, I have another episode, and I want to show you that episode. Recently, I've been teaching my kids about stock investment. So instead of cash, now Roblox has come to England and we're making accounts with Roblox and investing together. A few hours ago, I told my daughter, let's invest together. And we had this conversation because my daughter doesn't know much about the industry yet. Now, there are about 10 options in the portfolio, and among them, my daughter picked one stock she liked. If you keep doing this, sometimes the stocks you pick don't perform well right away.
on the screen, this
If you look at it now, it's a dual screen.
Johi, please press it.
My daughter and I are both using dual screens. So I was wondering whether to use Netflix or Google, but in the end, I liked the dual monitor setup so much that I chose it. By the way, my current attendance rate is 32%.
That's a lot, yes.
It went up a lot. So our kids did well to become siblings. And when I was living like this, I also got a lot of recommendations like this. Because I often talked about good things on the air, especially about real estate, that's why you guys listened like this and used real estate. And I think that's why you always use it and have a certain level of loyalty. So now, since there are a lot of rapidly changing industries, I used to ride the wave a bit earlier, but because stocks did well, the kids also became more interested in investing, in stock investment. I still have a fond memory of ChoiceStar.
that's right. Well,
So now let's take a look at the current recommendations for stocks on this channel, and I'll share the screen so we can go through it together. Recently, the United States stock market has been divided into 20 sectors. So in this case, rather than looking at Seeking Alpha's ratings, let's analyze the numbers and see which sector currently has the best score in Seeking Alpha's quant system. It seems like you can select stocks using objective indicators. As you can see here, there's a quant rating. I'll click here so you can see the rankings in order. As you can see, there are items currently marked in dark green. At the very top is B2, and B2 is a Bitcoin, Ultra Bitcoin exchange traded fund. So, since the exchange traded fund is in first place, there is a problem with actually selecting this item. In second place is Credo Technology with 4.91, and in third place is Celestica with 4.70. Yes. In fourth place is Uber with a high score, and then in fifth place there are 5 stocks among the top 20 that receive strong buying, including Taiwan Semiconductor Manufacturing Company. This way I can explain in more detail. And when B2 is ranked first, the score is also 4.98 out of a perfect score of 5, so it's almost a perfect score. Recently, I think it's a little better, so right now in the current market, the price of Bitcoin has been hovering around 10 million won, but in the last 2 or 3 days, there has been a lot of fluctuation. So since there have been a lot of positive factors, I think it would be good if you could briefly explain why Bitcoin is rising like this. I actually wrote an article about this myself a few hours ago. This is the summary of the positive factors. A new regulation has been introduced that allows you to invest up to 5% in the national treasury using the largest cryptocurrency, Bitcoin. So, for example, in a place like New Hampshire, a bill has passed that allows the state to invest up to 5% of its treasury in Bitcoin. Until now, no state had ever invested its reserve funds solely in cryptocurrency, but this time New Hampshire became the first state to be able to use Bitcoin for its reserve funds. That's why this news is so significant. And this law will go into effect 60 days from now. There are 50 states in the United States, so once one state starts adopting it, there's anticipation that other states might follow suit and adopt it as well.
So personally,
I believe this trend is not temporary, but will persist for an extended period. And the second good news is it's not just yesterday, but also today. Today, the Federal Reserve in the United States is expected to announce its interest rate guidance and begin its policy statement. So this isn't a final vote related to virtual assets or Bitcoin, but if positive news comes out regarding stablecoin regulations, and if stablecoins are recognized and accepted in the system, it could provide stability and help the market gain confidence. If the sentiment in the financial sector improves, it could have a positive effect on Bitcoin as well. That's why we can look forward to it. This is breaking news. Among the spot Bitcoin ETFs, the one that's been standing out is the BlackRock IBIT. This IBIT has already recorded a net inflow of $6.9 billion just in 2025. So what does this number mean? During the same period, the gold exchange traded fund called GLD, which is the largest and most well-known gold exchange traded fund, had a net inflow of only $650 million. That means more money has flowed into Bitcoin ETFs than into gold ETFs. So what this means is that there are now more people buying Bitcoin than gold. But that doesn't mean Bitcoin has reached the same level of dominance as gold in the overall system yet. If that happens, institutional investors who used to buy at least some gold might start investing in Bitcoin instead. Then, depending on the laws of supply and demand, Bitcoin's price could see a significant impact. That's just my personal thought. So recently, when the Securities and Exchange Commission approved the Bitcoin exchange traded fund just 2 or 3 days ago, the price of Bitcoin started to rise rapidly. If you check the current price of Bitcoin is at 99,330.
So 100,000.
There's a possibility it could reach 100,000. If that happens, Bitcoin could strengthen for a while and then it might start to decline again. That's how I see it. So right now, Bitcoin ETFs are showing the best performance among the current spot ETFs. The second highest rated item is the Grayscale Technology Exchange Traded Fund. Interestingly, Credo Technology is one of the stocks whose stock price has risen the most recently. The stock price has fallen 27.9% compared to the previous year. In the past 6 months, it fell by 3%, and in just 1 month, it dropped by 44%, showing a lot of volatility. So let's analyze the numbers and take a closer look at the current state of Credo Technology. First of all, the current rating is 4.91 out of a maximum of 5 points. The valuation has received a D, and the profitability and growth have also received a D, so these two aspects are a bit lacking. However, due to very good growth, it received an A+. Also, since the stock price rose over 40% in the past month, Momentum earned an A grade. The revision is also good. Recently, Nvidia has shown some slight upward movement, but AMD has been the opposite. So recently, seeing the continued upward trend in that stock, I'm leaning toward an A rating. So in this way, you can see that a lot of positive factors have been reflected in the price. Currently, the main experts who are continuously updating their stock price forecasts are giving target prices of 4 and 21. During the past month, 14 seeking alpha analysts have given their ratings, and among them, 13 recommended either a strong buy or buy, while only one suggested holding. On the other hand, not a single seeking alpha analyst recommended selling. This part is also positive, and Wall Street analysts are even more favorable, giving it a 4.53% rating. In the last quarter, 13 analysts covered the stock, 12 recommend buying, 8 strongly, while only one suggests holding. Historically, there hasn't been a single analyst who has recommended selling with the sell rating. And then, after moving to the earnings talk, the revision score has improved significantly. If you take a closer look at this part, you can see that the data is organized in a table here. Looking at the outlook for 2025 over the past 6 months, 78% have been revised upward, and over the past 3 months, 23% have been revised upward. So 23% over the past 3 months and 78% over the past 6 months have been revised upward. Not only have the earnings results been good so far, but as the guidance continues to be adjusted upward, market experts are also continuing to raise their earnings consensus. The 2026 outlook has risen 45% in the past 6 months and 13% in the past 3 months. The 2027 consensus has increased by 32% and over 10%. So the previous trend in earnings continues to rise, and this part should also be evaluated very positively. Next is valuation. Earlier, Mr. Minjun mentioned that the valuation has now gone up to 1,570 times. Because the price-earnings ratio is being converted from a deficit to a surplus, there is no average for the past 5 years. That's why it's being converted from a deficit to a surplus. Buying stocks at this point is often seen as premature, leading to mixed opinions. So although the volatility of growth tech stocks is still severe, if you can endure this volatility, it could be a good time for investment. You can try to have expectations like this. On the other hand, the PSR suggests the current valuation is not too high. If the PSR is 24 times, and even for forward PSR it's 19 or 28 times, unless you see explosive growth, this level of PSR is actually quite burdensome. But now, thankfully, the growth rate of technology is continuing to accelerate. In 1 year, sales have doubled. So right now, sales are up 200% compared to before. And for the next year as well, sales are expected to grow by more than 55%. With sales rising, profits returned to shareholders will lead to an even better earnings per share growth rate. Earnings per share is projected to rise 184% in the next year, which is already factored into the stock price. Over the past 3 to 5 years, it has increased by about 116%, and it's expected to continue rising by about 2 times in the future. Despite the good growth outlook, the valuation isn't low, so a sharp rise in the stock price may not happen immediately. In this situation, it's better to be cautious going forward. Let me show you the revenue growth chart. Gross profit margin is 63.7%. Now, if we compare it to other companies and compare it to similar sectors, it's even better. Compared to similar businesses or industries currently, a margin exceeding 24% is deemed a good business. And if you look at the company's performance over the past 5 years, it was around 60 to 65. So recently, the margin has increased significantly, and you can be sure that it's improving. The net profit margin is even better. That's because during the period when the company is shifting from an asset-heavy to an asset-light model, most of the margin has recently improved significantly. For example, if you look at earnings before interest, taxes, depreciation, and amortization margin over the past 5 years, it was -8 to 7, but recently it has improved to +4 to 3. Net income margin has turned positive, going from -13% to now +1.56%. If you look at it this way, you can see the improvement. And if you look at the cash flow from operations for Cassiopeia over the past 5 years, the average is -6 billion won. The company, which used to consistently post losses of around 6 billion won, has recently turned things around and is now posting a surplus of about 11 billion won. This is now confirmed. While credit technology in the industry is still relatively low, the shift from deficit to surplus is a positive sign for investors. Also, despite the high PSR, sales have doubled over the past year, which is impressive. And in the coming year, sales could increase by another 60%. Therefore, the growth of earnings is a category that is worth paying attention to, especially when interest rates are high. So I think it's possible to explain that I have continued to hold on to Credo Technology without selling it, even during that period. That's all for my explanation. I was also included in the Credo Technology recommendation list.
On the chart right now,
Can you give us an evaluation of Credo Technology at this point?
if you search for Credo Technology, you'll see that its current smart score is 54, which puts it in the top 33% overall. However, that's mainly because it hasn't scored well in other areas, so that's something to keep in mind. And the growth score is 85, which means it's in the top 1% among American companies. That's something I wanted to point out. So in terms of growth, it's easy to find companies with high growth potential, but it's hard to find ones other than Credo Technology. That's clear. Finding growth stocks outside of technology is challenging now. As mentioned earlier, these companies' stock prices are often highly volatile. So even if the index only moves a little, like 5 to 10%, these stocks can fluctuate that much. And on the other hand, if the index goes up just 1 or 2%, these stocks can go up as much as 10% in a day. So people who can handle this kind of volatility are the ones who can invest in these stocks. But if you can't even handle a 2% fluctuation, then it's really not for you. These kinds of stocks are not suitable for those who get nervous easily. So whether you invest in a certain stock or not, or whether you don't, it all depends on your own investment tendencies. That's why even if you invest in the same industry, some people make a profit and some don't. The reason is whether you can control your emotions or not. That's what really matters. With cryptocurrencies, price fluctuations are natural. Keep this in mind before investing. The reason for the low profitability here is because of the transfer of assets. A closer look at the chart reveals that it has followed this pattern for the past several years.
If you ask why,
Compared to a year ago, the growth rate has improved and the business profitability has also improved. The current cash flow, and the chief executive officer's business activities were all detailed in terms of current cash. Even so, the score is quite high at around 70 points. Profitability is determined by those factors, which is why investors examine these indicators when making decisions. Investors provide these indicators, but it's challenging for individuals to interpret all of them. So as you just said, if you look at the graph, you can see that the growth part and the profitability part are a bit low, but the current cash flow is good. That's how you can interpret it.
that's right. And
Next, the growth rate is also shown here in the same way. This year, sales increased by 120%, more than doubled, and profits rose by 60%. Earnings per share also went up by 180%. So in terms of growth, there's nothing to criticize. Next, if you look at the chart, both the short-term and mid-term charts are currently on an upward trend.
even with the momentum overall,
It's showing a very good pattern. The main point is that the valuation has significantly dropped in the recent alpha, according to reports. But if you look a year ago, or even in May of last year, even in the tech sector, there were times when the valuation was within a reasonable range and there were times when it was undervalued.
that's right. At that time,
The stock price was 19,001, which could be considered undervalued for credit technology at that time. These patterns are observable. So when I look at these growth stocks now, I see that the stock price went up to 80,001 at its peak. If you look at the chart, you can see that the stock price started to rise around November after receiving some positive news. When a company receives good news, whether it's a promising industry or a solid business, the stock price doesn't just drop. Instead, in growing industries, the stock price tends to get a lot of attention and rises significantly when positive news comes out. So you need to be able to see these changes, and I think you can make trades in credit technology by catching these opportunities. So valuation is important, but it's clear that good companies keep growing. I think it's important to organize your thoughts like this. So the reason I keep looking for these kinds of companies is because I want to find companies that can continue to grow. Even though I've already bought a lot of these stocks, if there's a reason for them to keep going up, then the recipe keeps getting added.
If it gets added,
Since it looks like there will be about 8 lineups, I can't show them all at once, so I'm putting the center up here for now. As you enter the development growth phase, now you can see the upper side is filled with various paths, even in the technological sector.
yes, that's right. The top part.
If you look here and there, these are all things that indicate growth potential. So if you look for these kinds of stocks and invest in them, you can find even better types like this in the future. So that's how it can also become a creator technology.
Good growth stocks.
Since it's in the middle of a rally, it's best to buy when it adjusts in the market. I'll take another look at why it's being linked to creator technology right now. On the news side, I provide content, but yes, I'm here as a stock analyst. Artificial intelligence inference growth is strong. So the industry that Microsoft chose, I recorded the video on April 10th. Since I recorded the video on April 10th, the story will be based on that date. What caused the increase previously? The current public float ratio is 18%.
As you can see these days,
Marks a score.
the number of public offerings is 2.
Don't be nervous, and at that time, try to introduce the species calmly. So even though they are good companies, many of them are overvalued. Among the companies that are overvalued by about 30 to 50%, one of them came to the market with this kind of crazy technology. I introduced it then too, and if there were more questions in the comments, I'd have recommended it again or included it. But until then, it didn't come up, so I just introduced it in passing. But these are definitely good companies, and at that time, compared to their peak prices, they had dropped by as much as 60%.
That's how it was, but
I was trying to pick them up, but I couldn't. Companies with strong growth potential are doing this business, as shown by the data I brought to show you. So when you look at the data of these growing companies, especially startups, it seems like there isn't much of a difference. So after looking at all those types, in terms of portfolio management, you have to pick only one item because you have to allocate your assets. And that's right. But in a portfolio, you need to have growth stocks in an offensive style. And not just that, but you also need to have a group of stocks that are stable and don't change much. And you need to have these kinds of types as well. So in that sense, a stock like AMD is good for rounding out your portfolio. So even if the timing isn't right, if you have a portfolio with steady growth, that's a good industry to be in. And in the case of technology, if you pick the right growth stocks and the right number of them, you could see returns of 200% or more. So that's the advantage of being in that kind of industry. Next, in the middle of the tech sector, companies like Google and Meta are at a moderate level. If they grow as much as expected, the S&P could rise significantly. So when you're building a portfolio in this way, that's why the market is currently focusing on growth stocks. Depending on the sector, the performance will vary, but overall it looks like good performances will continue.
Thank you for your helpful advice. Listening to what Mr. Dapio said, I have a lot to think about as well. There is a company that provides risk management consulting by collecting data from credit tech devices and sending it to the center. One of their biggest customers currently accounts for 86% of their sales.
that's
Now, if it's not Microsoft, it's Amazon, because they didn't stand out in the market like this.
Just guessing.
But whether it's Microsoft or Amazon, the fact that one company accounts for 86% of the market share is extremely risky. So if the relationship gets shaky, since most of the revenue comes from that, you have to consider this part as well. And also, as Representative Aka said, it's important to think about whether the market direction and the types of businesses can align. For example, the S&P 500 has been on a rebound lately, and if this rebound continues, Amacrit Technology could be one of the stocks that benefits the most. But if it turns bearish again, then it could become one of the stocks that falls the most. So depending on the direction of the market, returns can vary greatly. So I think it's very important to keep this in mind as you make your decisions. So today, we're looking at stocks like AMD and also stocks like Credo Technology. As you can see, they're both artificial intelligence beneficiaries. It's a United States listed stock, so that's how it is. So right now, out of the 20 stocks I'm personally recommending, I'm going to talk about which 2 stocks I'm recommending from different systems, analyze them numerically, and also briefly cover some additional stories. Thank you for sharing such important insights and useful information with us today.
Thank you.
Now, every week, the information you provide is so helpful to me. I'm looking forward to hearing more stories next week. Thank you for your hard work today. I hope to greet you again every week.
Mr. Debio, you also worked hard. Thank you.
Thank you.
thank you.